Practical accounting, the better way to learn.
Welcome back, folks. This is an exciting module that you guys are going to be viewing here, hopefully, because we're talking about cash. So, Professor Hillard, what's the significance of cash as opposed to the rest of the accounts? Why do they call it the most important account?
Well, if you don't have cash, you're out of business. And cash can go up or down. Statement of cash flows, it explains why cash changed, because cash can go up or down because of multiple reasons. You could make a profit, or you could borrow from a bank, or you could sell a long-term asset. All would increase your cash. Statement of cash flows is a very useful one. But what I'm really excited about in this chapter is that this chapter is often taught mechanically, like, memorize this, and it's really pretty dry and pretty unsuccessful way to do it. We've got a better way that is intuitive, and it works for both indirect and direct methods simultaneously so that you understand it. And I can assure you nobody else does it this way, because we got the better way.
So how about a brief look inside?
Okay, let's take a look. First, we're going to take a look at overview and terminology for statement of cash flows, which explains why cash has increased or decreased during the current period, and how it's important, particularly to the finance profession. There's only two directions, cash in or cash out. Here's the key thing on this chart. The practical T simplifies the presentation and analysis of statements of cash flows. This is truly, truly unique, folks. And we'll show you how in a moment. There's only 3 sections. We break them down to English and 2 methods, which we teach you both, but our method works so well. Let's just get to it. We're back to our practical T format: asset plus dividends plus expenses equals revenue plus contributed capital plus liabilities. This is all good to go. If you add to this side, it's cash out. If you add to this side, it's cash in, and the opposite is true. And we'll go through that with some examples, some of your 10 basic transaction examples, so that you can understand and not memorize it. We're not asking you to memorize it here, folks. We're asking you to understand it at a very fundamental level. It's nothing new if you've been hanging with us. If not, you'll see it pretty clearly right away. Here we go. Here's our 10 basic transactions with outflows in red, inflows and sources in green, and changes in cash are not shown. And then we're going to come back and re-summarize it, give you a transactions and a summary for practice for source and use. When you get them right, this pointer turns to a thumbs up. It's really pretty cool. Then we go on to sections. Sections, we also have a pretty straightforward approach. We do investing and financing activities. Operating activities is everything else. And then we have section practice and format for the statement of cash flows, and then talk about the only relatively tricky thing in this whole chapter is long-term asset transactions, gains, losses, and depreciation, but we'll explain the why behind it. And finally, you're moving on to the cash flow primer, which is your interactive thing to play around with. If you watch what I'm doing here, that number will change your cash positions. It'll change for cash in and out. It's a great way to interactively learn this. So hope to see you on the inside.
That's pretty cool. If you think about, cash is the one account that can impact every account on the balance sheet and the income statement. And so I think this is a better way to figure out how the cash flow statement works. I think if you can get this, work that exercise, you'll be more than satisfied to learn what you need to learn about cash flow statements.
Yeah, and don't be Don't be shocked if this one's shorter than most of them. We just get to the point. Hope to see you inside. All this content and more at practicalaccounting.com. See you there.